evening, everybody. Anuj just made it in the nick of time.
Thank you.
Clearly, AI is not solving for Bangalore's traffic just yet.
Yeah, I mean, Google Maps showed me 4 o'clock, but surprisingly, it took me 45 minutes more than that.
Well, that's a problem if anybody wants to solve for that. Okay, so thanks, Beverly, for that. Just reintroducing the panel very quickly and setting the context. As we know, India's lending landscape is one of the most dynamic yet demanding ones in the world, where it is a space where innovation needs to thrive with regulation to really achieve scale, and technology has to really deliver not just speed, but also trust. So that's what we're really decoding today, the resilience playbook, and what it really takes to build scale and trust in the lending space, where customer expectations and compliance frameworks and risk models are really evolving faster than ever. So great to have 4 gentlemen who are, of course, building some of the most defining fintech and lending platforms in the country. Opening thoughts to you, and Hemant, if I can start off with a question on, how do you really see the landscape today? Credit penetration, of course, is rising fast, but also risk appetite is constantly being tested. And when you look at PhonePe per se, it is a platform that has scaled a lot of trust now on the back of payments as well. That's what, the mass knows. But when you built out for lending, what sort of an operational playbook did you look at, even in terms of upselling and cross-selling to the current customers?
I think when we spent a decade building out the entire payments business, and as we built, payments was a slightly different playbook, which was built at scale, which was payments is a transaction which you run very through and you get through the transactions very fast. Lending was a very different playbook because it's a journey that the customer needs to. It starts with the trust that the customer has on the platform, and you need to handle the customers right from onboarding. It involves KYC, mandates, and repayment, and a lot of all of this. So it's a complete life cycle that you need to get through. So we oriented ourselves in a way where, first internally and externally. I think internally what we decided is we want to play the same 0 to 1 journey of what we've covered on payments. So we just reoriented a team to be thinking 0 to 1, thinking consumer first, and going on ground and really understanding who the customer is. Like we are playing in all space, but specifically I would like to say for example, merchant lending, where we are really solving for not the within the MSME, which is medium, small enterprise, but there's a segment called micro enterprises, which is real small merchants on ground. So, for us, the whole operational aspect was to understand what the customer needs and build around a life cycle which handles the customers through the journey and adds value to the partners that we tie up with. So it was a complete relook on how we look at the playbook around lending, work with the partners in the ecosystem. There are very large players, there are very nimble, new age NBFCs and traditional NBFCs who have wealth of experience. But everyone has a different set of playbooks, set of target customer segment that they want to, and the overall integration. I mean, some operate in very legacy systems, some with new age systems. So that entire transition required for us to relook at how we are looking at and how we are playing out into a very 0 to 1 journey.
Great, and we've seen that scale over the past 2 years, Hemant, and we've also seen Frio, which has had a bit of a flip compared to what PhonePe has done. You started off, as a pure play lending platform, now converted into a multi-product financial ecosystem. So what are some of the lessons in your lending journey that you sort of put into practice when you evolved?
Yeah, I think, when we were only lending, we were going to the large mass of the country, solving for tier 2, tier 3 Bharat, as you say. So that customer segment did not change for us. The learning that we realized is that not everybody wants credit at that point of time, A, or B, not everybody will get credit at that point in time. Now, if I get 100 customers, as you know, and everybody will vouch for it on this panel, you will get about 100 people. You come in, you call somebody to your house for a party, and then all the 100 people outside your door, and you only let 5 people in. That's just the way it is. Balance 95% people go disappointed. So we said that maybe we should hold them in some shape or form. Now, like Hemant said, PhonePe solved for a decade, on payment side, so there's a nice way for them to hold. We starting only in lending, we did not have too many hooks to hold the customer beyond what lending happened. So the one learning that we had was that how can we ensure that we have products, value propositions that have people hooked, / coming back, / see value beyond lending. Now, if I were to ask you, maybe you want money, you'll say, no, I don't need money. I have a good income, so I don't need it. But maybe you'll use some of my other products. So you'll still interact with me, and I've acquired a good quality customer, a high income customer. So those were all the learnings that we used to say go from a mono product vertical, if you will, to multi-product platform. At least that was the learning, at least the way we put it out. And today, for example, we interplay each product. So for example, if you do certain amount of payments, there's a certain amount of data that you generate. So I have some kind of confidence on lending. I do insurance, so I can say that, if you take this insurance and you say, secure your credit, if you will, I will give you certain, points internally, so on and so forth. If you do some investments on my platform, I know that you have some disposable income, so I get some more confidence. The customer also gets some confidence sharing a little bit more data than just randomly applying at 5 different places. So I think that's been our learning that we have taken over to become a multi-product platform like Frio.
Right. And very interesting point you made there about, do you actually get that credit when you really want it, or are you after just chasing people for, to acquire the customer? That's really the...
Yeah, see, lending is a funny business, right? The guys who don't want the money you want to lend to, the guys who want the money you don't want to lend them to. So there's always a fine balance in you to find that match again and again. Home loans is different, etc. There's a very great match. You want a loan, you want to buy a house, there are a lot of people available. So those are slightly more like car loan, home loans are very different.
Yeah.
But when you look at the large mass market, it's the dichotomy is real, and finding that little balance in between is the most critical part that defines your business.
Of course. So to double click on that, Gaurav, I think you are at the intersection of that in a sense, right? Axio was one of the early players in the lending space, now under the umbrella of Amazon. How do you really balance rapid customer acquisition with credit discipline, especially now with a larger conglomerate?
So the short answer is you can't balance growth and risk at the same time, right? It's not a payments business where you can grow multifold month on month. You have to have a restricted kind of growth plan, because the minute you try to grow fast, irrespective whether you're under an Amazon umbrella or any other umbrella or any other investors, you will make mistakes. You will see cycles. So the idea is to have a controlled growth plan, make sure you solve for risk at any given point in time. The other way of doing it, which we have the opportunity now, is to be able to leverage a much larger balance sheet and lower cost of capital to be able to go deep within a certain customer base, right? Most NBFCs have to service new to credit customers so that they can charge them the right amount. But now with better access to capital, you can go after that segment at a lower cost and provide that better cost of capital to a deserving customer who's your first time borrower, right? And that's how you grow with them. So you start them at a smaller credit limit, but stay with them over 2-3 years. And that's where growth actually compounds over a 2-3 year period.
But to also get in your view, the other end of the spectrum when it comes to B2B and institutional credit, that's the space you're in. Here you have, liquidity, data transparency, and of course, risk management that are really critical elements. So what are you looking at in terms of the resilience playbook that you are outlining?
Okay, I think there are 2 dimensions to resiliency, at least the way we see it. One is obviously we as a platform need to be resilient. We are a B2B platform. Today we have about 58 to 60 lenders on our platform. We do about 150,000 loan applications coming to our platform per day. So our platform needs to be resilient, right? Resilient in terms of availability, latency, all the tech stuff. Because most of our customers end up being companies like PhonePe, right? Like Frio, for example, or NBFCs or banks in the country. And we have an SLA with them saying that, look, we're going to ensure that from the time a loan application comes to our website till the time that the money is disbursed into the customer account happens in under 9 seconds. Because if it's beyond 9 seconds, the customer is going to drop out. So I need to be resilient in terms of being able to provide the service levels that I'm giving to the customers. But the more important thing, I think, is resiliency does not stop at tech. Because a lot of our customers today, they expect us to also offer them resilience on the business side. What I mean by that is our customers need to be resilient. Today, with one pen stroke of the regulator, an entire business can get shut down, right? Recently, we had something like a co-lending model 2 that has changed to co-lending model 1. That entire line of businesses kind of needs to more or less come to a stop. Now, what this means is I need to be ready to enable the customers to switch from one model to another model and be compliant within the time limit that's prescribed by the regulator. So that's one part of the resiliency. Second, We pride ourselves on being a network today. We are not just a tech platform, we are also a network. What that means is we enable seekers of capital to partner with providers of capital, which means if there is, so beyond the tech, there's also the partnership aspect of it. So if there is someone who needs capital and let's say they're partnered with a bank to provide them the capital, what happens when that limit runs out? That's where we also come play a role in ensuring that, look, if bank A is not able to fulfill your capital requirements, then we have bank B on the platform who can fulfill the same requirement. So resiliency works in multiple layers, and that's what we do.
Sure. I think we've set the context in terms of, how really the ecosystem really stands and what are the elements that we need to balance. Let's talk about tech and AI, of course, now that is in focus, the next wave of technology that's sort of being deployed across all sectors. So talking about lending per se, when you look at creditworthiness, how is it assessed, how products are being personalized and collections optimized, how are you looking at it at PhonePe, Hemant, in terms of using AI and data science across consumer and merchant lending as well, say, funnel management, all of that?
So I think there are a lot of combinations today, when you talk of AI. But for us, it's a mix of AI, ML, and of course, data science sits at the center of it. Looking at leveraging, when we look at leveraging AI, when we look at it, I think there are 3 or 4 fundamental aspects for us. The first one is how do we deliver a superlative consumer experience, which is trying to understand and trying to feed in all the data inside the funnel and see, is there a way where I can kind of intervene at the right point and right time? Like Anuj said, right, the need for lending is not always, and what is that signal and what point in time can we kind of bring in, and how do I kind of refine the consumer experience? So the entire consumer experience and being able to get the customer to the loan at the right time in the right way. The second is around cost efficiencies, and AI is playing an interesting role, be it around, doing quality assessments on the calls or being able to create automated calls, or, localization is another big thing which, more than anything else, I think, which will play a big role, because to be able to kind of localize the calls into linguistic, multilingual country like in India, to be able to kind of deliver that at scale, it really helps. The third is around the entire fraud element, and fraud is real and genuine, and to be able to kind of look at it. Fraud also includes for us early warning systems. So what we have also created, signals around which we help lenders with, be it around collections or be it around at the point of underwriting, how they kind of mitigate the risk that comes on the platform, how do they kind of optimize the channels that we are, or how do we also do collections for our partners, but is a simple nudge enough, or do you need to do a call, or do you need to do a message? What kind of cost optimization, what is the customer's past history like, and how do we kind of mix that in? That's the third element. So these are the 3 or 4 pillars that we built on, and we're investing on trying to see how AI plus a combination of it. There's a lot of machine learning goodness also that brings in. Data science inherently sits at the center of it, because predicting anything which is futuristic, really helps. And, when you kind of put in the right models, be it around targeting, be it funnel improvement, be it around early warning signals, be it around, assisting partners on the risk side, really helps. So we are investing in these 3 core pillars.
From a futuristic lens, like you mentioned, right, are you also looking at deploying AI or offering dynamic predictive credit lines where you can actually see real-time, lending limits evolve as consumers sort of?
So we are a marketplace. We work with lenders, so we don't offer credit lines. But I feel, AI can play a certain role at certain point in time. I am not sure, honestly, because, when it comes to risk, and risk is a very different game. And, just handing it over to machines is going to be incredibly, I would say, as if I look at from a lender's perspective, I think they'll be uncomfortable, because you need people, you need brains, you need minds to track what is happening. I think beyond a point, it is not just about handing it over to machines to run those models and predict. So to some extent, it can help create signals. Beyond that, I think it's a journey which we'll have to see how it plays out, at least in my view.
Sure. Bharat, your thoughts on this, considering that, you are in the core space of also giving out these credit lines in terms of improving decisioning, compliance, predictive defaults as well. How are you looking at AI and automation?
AI is kind of there everywhere today, right? So tying back to the theme of resilience, so obviously we have AI, we've been in the AI space for like the last 4 years, started leveraging Gen AI significantly in the last couple of years. So we have AI models for like credit decisioning, OCR, facial recognition, the works, right? But one of the key use cases that we also seen is, tying back to the theme of resilience, is today, let's say, an app like PhonePe, for example. They're not customers of ours, but hopefully they will be someday. But suppose their loans were to come through our platform, and let's say a customer got stuck because they could not verify the PAN, right? For example, yesterday NSDL was down for some time. So a lot of customers get stuck. They're not able to complete their journey. What we are using AI for right now is we are using LLMs to be able to firstly find out when NSDL is back up, and then be able to notify those customers of PhonePe saying that, hey, look, through the app, through our originator, saying that, look, we know that you were stuck at some point in time. Would you mind resuming your journey? Bringing them back to the top of the funnel. This has had like a phenomenal success for us. So that's kind of what we are really leveraging AI for these days.
Interesting. Gaurav, your thoughts as well in terms of, how do you particularly for new credit users or the underserved segment, how do you make credit more inclusive?
I think where we are focusing the AI piece is on collections, right?
Okay.
So I think, and that's where I think most of the advancement we'll see in the coming years on collections, on one, being able to predict before a person even goes bad, right? But more importantly, when a person defaults, how do you make the collections completely humanless? So you have agentics, you have bots, etc. But once the person is kind of in conversation with your AI tools, how do you make it more empathetic? How do you kind of solve for at least some amount of money coming back without any human intervention? And I think there we've already seen leaps and bounds progress. Today, about 90% of our collections in the early 30 days happens without any people, right? The balance 10% is hard, and if we can really solve that in the coming years, I think then lending becomes a much easier game, and you're able to improve the top of the funnel and serve customers who are new to credit. So I think the real resilience, the real AI is really going to come at the bottom of the funnel when it really comes to collections.
Okay. Now with e-commerce in play as well, on the other side of things, what about the offers or the limits and the repayment plans? Do you do something on that front as well with automation and AI?
Yes, we do, but I still think the real customer experience is not so much in terms of the limit or the offers. I think ultimately in India, everybody loves the price. And so if you can offer a lower price, people are happy to wait. They're happy to take a smaller loan. So if you're able to get the price right, I think that's where the best customer experience is. So I think where we have started is, how do you price the customer right? How do you do risk-based pricing better? It's yet to play out at a large scale in India, but can you take early steps in actually pricing risk and not taxing the good guys for the sake of the bad?
Right. Fair point there. At the end of the day, it's human psychology that really is at the core of all the decisioning, even if AI and automation is at play. Anuj, your thoughts, I would you call yourself a super app in the fintech space right now? What kind of a unique data advantage or vantage point do you have across credit payments and savings? Now you've got into insurance as well.
Right.
So,
and a super app is a little bit of a much oft-used word, and I think in front of PhonePe, I'm not sure whether I should be calling myself a super app. But let me put it this way. The jury is out there whether it works, does not work. There are many people who have said they'll have multiple apps for same things. A lot of people have put it in one app, and I'm not just talking about financial services. I'm looking at other sectors as well. So there's enough reasons and learnings that's happened in India and outside India. I think for us, we don't necessarily we don't call ourselves a super app for the simple reason that we're very focused on financial services. For example, we don't have flights, we don't have shopping, we don't have groceries.
Yeah, within fintech,
So very specific, very focused use case on 3 or 4 things that a middle-class Indian customer needs, right? And all of us, as we were growing up, I think first we had a bank account, then we had some payments, then we got our first job, we got a credit card, unsecured credit, we got a family, we got insurance, we had more money, we invested in wealth. That's typically the financial life cycle that all of us in this room have gone through, right? So if you want to just be very focused on trying to solve for a family, a middle-class Indian family, what are the 3 or 4 things that they will need at various stages of their life is what we have done. Now, 7-8 years back when we started, we had to start with one. So we started with one product and then we diversified. A lot of people would start with something else and they would diversify. So that's everybody's journey for that matter. So I'm not sure whether I want to call it that, but definitely a financial platform, digital financial platform, where we want to go after the next 500 million customers. That's our aim, that's our goal. In India, unfortunately, there's no digital banking license as such, so I can't call ourselves that. You can't accept deposits, it doesn't sit on your balance sheet, there's no license like where you would see in, say, a UAE or even the US or Europe for that matter. Maybe that comes in a couple of years' time, then that will open a different ball game altogether. But as of right now, there isn't any. So we are a digital financial platform that gives very specific these 4 use cases to my customer.
Sure.
And the data obviously between each of these verticals or whatever you take from us, obviously, it helps build your data, use the AI algorithms, etc., to say what can you do next, what can you do next, what can you do next.
Sure. So that was my question in terms of, how do you use AI to synthesize all this data and get a 360 view on, say, the customer's financial health? Or does it also lead to a lot of back-end complexity, and are you solving for that because you're spread across so many products?
No, I think, because we did it step by step, we were able to do it properly. If on day one, if it launched 4, we would have had a problem. Because we did one after the other, we probably were able to integrate better. But that's nothing to do with AI or not. Technically, people have been solving this for long years, right? So basic data science models just will help you figure it out. Yes, I think the time to understand a customer and get a new customer and get a 360 view, the time to do that analysis has cut short because thanks to AI and the new tools that are available. But the logic has not changed. Like, for example, I think 1 year ago, we were about 1.5 products per customer. Now we are crossing 2.2 products per customer. Our aim is to get to about 3 products per customer. Not all will be making money for us, by the way. I mean, if the guy uses my UPI platform, I'm not going to make too much money on that customer anyways. So it's not to say that each one of them are money making for us, but that is a goal that internally we track to say that the customer keeps coming back to us again and again and again. But it's nothing to do with AI specifically. It helps, but I think the science on this has been done in financial services for time memorial.
Got it. Is AI sort of fast-tracking any aspect of efficiency and optimization? Gaurav, your thoughts on it, especially even in terms of, the risk profiling for borrowers that you do? You spoke about it a little bit, but are you sort of seeing that become more efficient with AI in play?
I think it's still early days, right?
Okay.
And it will get there. But I think, like I said, at least the way we are looking at it, the focus is not so much on underwriting or leveraging data to give better offers. That will come. But the question is, how do you make the customer experience better for a defaulting customer?
Yeah.
People always think about the good customers, but the rubber hits the road for a defaulting customer, right? And what can you do there, and how do you improve that through any AI? That's really the question we are trying to answer, and I think there's a lot more to be done there.
How are you looking at risk intelligence, Bharat, at UB?
Risk intelligence. So we have a subsidiary of ours called Acumen that's in the business of credit underwriting. So we gather data from MCA, from courts, from police stations, all kinds of data, and we are able to provide a very summarized point of decision for underwriters at banks to be able to make a decision. But coming back to your point about how are we using AI to really gain efficiency, one point I just want to highlight is I told you that we are working with about close to 60 lenders on our platform, about 6,000 enterprises who are borrowing across co-lending, digital lending, supply chain, securitization. And this entire thing we are able to manage with an operational team of 8 people and a DevOps team of 5 people who are maintaining this application across 4 or 5 countries. And I don't think we would have been able to really achieve that had we not had AI at the core of what we do. So yeah, we are seeing a lot of efficiency over there.
Now, that's a great use case that you also pointed out. Now, before we wrap up, a closing question on the regulatory aspect, of course, because that seems to be front and center now, especially in the fintech business. And digital lending has, the regulations on that front has really sharpened over the past 2 years. So how are each of you really ensuring that compliance is not really a cost, but a competitive advantage?
For us, because we, payments was fairly regulated, compliance was our DNA. And, I think in this age, there is if you think of innovation, lending, there is scope of innovating, but innovating within the framework of what the regulator defines, and that is rightly so, because it just creates a very resilient ecosystem of how do you kind of lend to the customers and the books that the lenders create. So for us, compliance is the DNA, and if it becomes a DNA, and when I say DNA, we really ensure that it is instilled in the heart of everything that we do. So even tech and the product folks, because finally a lot of things which is created, the systems, the framework, the architecture of what you're creating also needs to have a blend towards how are you looking towards adhering towards compliance, and there are various aspects of compliance. So ensuring that they understand. So we ensure that every member of our team understands something called as DLG, the Digital Lending Guideline. And why is that so? It's not just a guideline. It is to kind of reinforce the fact that we take it seriously, and you need to have that at the back of your mind when you're interacting with a partner, when you're creating a system, when you're kind of creating a journey for the customer. So for us, making it the DNA is the biggest moat.
Sure. Anuj, your thoughts? Do you think the regulatory stance on customer protection also has a lot of impact on the product design at the end of the day?
Yeah, absolutely. I mean, the last 2-3 years, the number of conversations we've had around this topic is just unbelievable. Open in these kind of panels and closed door. See, I think it was very clear from the start that either you're compliant or you're non-compliant. I don't think there is any mid-path now anymore. I think that's been adequately hammered home over the last couple of years to say either you're compliant or you're not compliant. Now, within that, I think you're asking a very good question is what do you think about product design? And I have enough examples where I think that we ourselves as in Frio, and I know a lot of other people, we created products by stitching together a few solutions out there in the market, which now would seemingly think that they may not be compliant or they may be in the gray area as they will, right? And I think that is important for us to keep pushing the boundaries and seeing what's possible, what's not possible. I think the way the RBI is trying to also solve for that is by giving sandboxes. Maybe you can go and talk to the RBI directly and say that, I want to try out this, give me some time, I will do it in a contained manner. So I think those are the conversations which I don't think we were having 5-6 years ago, but have started happening in the last 2 years. I do think that those products, etc., do suffer. I don't take that away. If you think about 2 kids coming out of college today and think that, I see this is a problem, let me put this solution together. Now, some way or the other, they may have broken some rule, or they have broken some rule in completely being unaware of what they are doing. But it's probably not a big thing as long as it's contained and it can be, you could put guidelines around it. So I think there's a little bit of a healthy pushback that needs to keep happening from both sides. We, as an industry body, we are part of many industry bodies, so we do that. We keep trying to push back, saying that, maybe we should put guidelines, maybe we should not look at it this way. And the regulator has been very, very open to at least hearing us out and then coming up with revised guidelines. But I think that's a constant process. I don't think you're going to get an answer one way or the other. Neither you're going to stop the innovation for the kids coming out of college to be able to come and say, can I do this, can I not do that? So there will be people like us who have done this for quite some time, probably know it. People who are coming in new will not know it. And then we have to keep finding this balance. So this tug of war is not going to stop anytime soon. It's just that the scale at which you do it and how fast you are able to make those changes is what's going to change.
Yeah. Gaurav, your thoughts?
I think we look at regulation 2 ways, right? One is, first, it's an identity problem. The old movies you have, are you a party or are you the broker? As a fintech company, you have to decide, are you an NBFC, are you a platform? Don't try to get the best of both worlds. You want to be an NBFC, but you want to be a platform so you get a better valuation. Doesn't work. Pick one, get regulated accordingly. I think the second thing where I disagree slightly with Anuj is I don't think you can innovate on the fringes of regulation. If you are going to be regulated, there's enough ample room to actually innovate within the boundaries set by the regulator. You can't create a product that's a debit card but made to look like a credit card, right? It doesn't work in this country because while you may have the best of intentions, there are hundreds of people who don't have good intentions. All right? So the idea is decide who you are, what's your identity as a lender, and to always make compliance a moat in the business and innovate within the 4 boundaries of the wall that the RBI has set. Because at some point, if you try to scale a product that's not within the boundaries, it is going to blow up. And we've seen several examples of that.
Yeah, mean, that's of course a valid point there because, you don't know when they'll come knocking on your doors. I think that's been happening a lot in the past 18 months as well. Your thoughts at UB, you sit at the intersection of institutional lenders and borrowers. So how is that influencing the infrastructure that you're building?
Significantly. Actually, thank you, Gaurav. Your role and my role is very clearly defined. You're the NBFC, I'm the platform. Now, the unique problem that I have is we have hundreds of customers, each of who has compliance in their DNA, right? What this means is you take any bank today, they're typically going through some kind of an internal or an external audit practically every month. Multiply that by 100, what that means is me and my team are responding to auditors practically every day. One lesson that we have learned very hard, no, I wouldn't say hard, but certainly learned over time is you can't manage compliance. You can't just manage it in time for an audit. For us, we need to ensure that we are compliant by design and be compliant every single day in which we operate. To that effect, what we have actually done and started doing is we have believed in complete transparency. So we have opened up our dashboards to our customers. They can see every small thing that's going on in our system, right to the point of seeing how many messages are in the queue, what the database latency is, what the utilization of the storage is, and if a certain transaction is taking more time, it's not just us who's debugging it, the customer can see what it is. So I think transparency is very critical. It builds trust, and it ensures that we are compliant while we operate. And
sure. I think on that note, we'll wrap it up. Thank you very much, gentlemen, for your perspective.